Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is on support and resistance. Understanding that support and resistance are areas, they are not exact pennies. I think too many traders out there, they see a bottoming tail. The bottoming tail is at $19. They put their stop loss at $18.99. It drops down to $18.90 by 9 cents, stops them out, and then poof, goes higher for the entire rest of the day. And you sit there like frustrated, like Michael Jordan, the meme. Anyway, so this happens to a lot of traders, and they are taking decent trades and they're taking them in the areas in which they should be taking them, but they're not giving them enough room. Or if they do stop out, which does happen from time to time, even if you give it more room, then they're not getting back in. So today's lecture topic, guys, is pretty much all charts, okay? Not a lot of text slides in it. And we're gonna talk about that. Why support is an area and why it's not an exact penny. The things that you can look at, right? A list of things that you can look at to see where and when a stock is likely going to bounce off of an area of support, as well as why you should give it more room, how much room you should probably give it, and then even if you do stop out, you should get back in. So we're gonna talk about all of those topics today. I think it's a good lecture because I think there's a lot of you out there that are frustrated. You're breaking even, maybe you're losing a little bit of money, and for the most part, you're doing things properly. But that little bit makes a really big difference, and this topic is one of them. I get tons of emails about it from people going, Jared, what did I do wrong on this trade? And I look at it and go, really nothing. You just kind of got shaken out and watched it go higher. Give it a little more room, potentially get back in. So that's today's topic. As always, guys, if you like these videos, please click that like button. Please subscribe to the channel. And don't forget those click notifications. You know that little bell there? You got to put that out there because then you'll get notifications every time I upload a new video. I'm Jared Wesley of Live Traders. Let's get to it. Extended into a support area equals a bounce. That is today's lecture topic. We're going to talk about more than just that. Okay, so it's not just extended into a support area equals a bounce. We're going to take a look at a few other things and how you can better take advantage of this, because I'm seeing a lot of traders either not understand that a bounce is about to happen, or if they understand a bounce is about to happen, they don't take advantage of it. Or one more thing, they put their stops so tight they get shaken out by a couple pennies or a nickel. It happens to me from time to time. And then they just watch for the rest of the day as what? The stock bounces. All right, so we're going to talk about all three of those things. But before we do, we have to talk about when will the insanity stop? This week, I have two pretty good ones for you guys. Blame me, I guess, because we're all part of that GME situation. No, we're not part of it, but we've all at least been peeking in on it, watching it. I would say, in all the years I've been doing this, the next one maybe takes the cake, not because of the dollar amount. We've seen millions of dollars lost. Heck, we saw that one kid lose $50 million, right? But this one is just for the sheer ridiculousness of the commentary, okay? So bear with me on it because it's absolutely absurd, okay? So here we go. I'm urging you to read if you own AMC. Now, I don't want to read this ridiculously long diatribe of horse shit, okay? But this is some of the most ridiculous crap that I have ever heard in my entire life. You see those headlines? That pushback from the big suits of Wall Street? We did that together. If today was any indication at all, they are shitting their pants right now. I am sure they are. The yacht's running low on fuel. The plane can only make it to Tokyo. Can't quite get to Singapore because they're just, shitting their pants. Okay? So let's get to the good stuff. The squeeze may not be tomorrow, and maybe not Monday, but it's coming. I was deep in the red today. And in any other scenario, that's key, in any other scenario,
I'd be panicking. But this is bigger than me. It's bigger than you. Yes, you reading this. This is a chance for us to come together as a collective and wait for it and revolutionize the economy for the better. Guys, revolutionize. I can't give a straight face. Who writes this shit? All right? The best part is, and then after all that diatribe, after all that, they go and say, don't let emotions cloud your judgment. Okay? Don't let emotions cloud your judgment. I'm here to ride or die AMC and GME. The smartest thing he said is, I love you morons. Okay? 14,600 comments. I want to repeat that. 14,600 comments and 91% upvoted it. Yes, ladies and gentlemen, this is the all-time takes the cake for when will the insanity stop. Not just because of this ridiculous diatribe, but because of the 14,600 comments, of which 91% were upvoted. That, ladies and gentlemen, is how stupid the general public is. How asinine, flat out dumb they are. And to even think they put a dent on Wall Street. Wow. But hey, good things did happen. Oh, shoot. Wrong slide. I didn't mean, I'm down 45,000 on GameStop. Hold the line. Hold the line. Where the hell is the short squeeze to 1,000? I need help. I'm 70,000 down in the hole and I just can't take it anymore. I don't know how to continue with this. I don't know what I was thinking when I listened to all of you degenerate Fs. Anyway, I guess I'll just keep holding GME and hope for the best. Guys, you don't ever want to be like these people. Trust me, you don't. Okay? This is true insanity. This personifies why I started these segments of when will the insanity stop, okay? It's why I spent a little longer on today's. This is, honestly, it's probably the single greatest segment of when will the insanity stop. This is absurdity. All right, people are betting their entire life savings on something they don't even understand because they heard it from some guy or girl on Wall Street Bets or their Uber driver who, wait, it's your Uber driver. Process that for a second. Okay. Anyway, let's move along. All right? Unbelievable. All right, so today's topic, let's get to the good stuff. All right? Yeah, the remedy, lower the voting age. Anyway. All right, so we're going to talk about more than just, quote, extended into support, okay? But that's today's general topic. And it's not just what you think. It's not like, oh, geez, Jared, we get it. Extended into support's a bounce. We're going to go a little deeper than that, okay? So let's take the first one here. We've seen this slide before in the past, all right? So this is the general principle, right? If you're down 1, 2, 3, 4, 5, 6 bars, you're probably closer to a bounce. But the question is, what are we looking for to get information? For example, somebody today was talking about buying IWM. It was tanking today, right? It was literally just getting hammered. And I said, yes, you're right. It's looking closer to a bounce. But we can't just randomly say, for example, this is a bounce right here. Or the next bar, oh, this is a bounce right here. Or the next bar, this is a bounce, right? We can't just randomly say that. We have to have some more information. So what is some of the information that we're looking for? We're looking for extendedness, so not just the overall picture. For example, if this stock normally does $1 in average range and this move is $3, wow, that's a big move down. It's triple the average range of this stock, okay? So overall move is something to consider. Next, what are the size of these candlestick bars? Are these candlestick bars narrow range bars and there's 6 of them? Or some of those bars really wide range? Not just wide range, but like the super wide range bars. And then on top of that, is there a volume spike on this pullback? Okay, so we're getting there. We're putting it all together, right? So do we have a volume spike on the pullback? Increased volume is good, right? That means there's a battle going on. The people that want to exit the position are leaving in droves. So what does that mean? There's fewer people to sell into us if we choose to buy it. And then one last thing, what do we get at the bottom of the move? Do we get some form of bottoming tail or change of color bar? Do we get something, okay? So think about what we just did there. 1, is the overall move much bigger than normal, right? Say it's $1 versus $3. It's normally a $1 range. Today it's $3. Check, okay? Do we have multiple wide range and super wide range bars? Check, yes we do. Next, during this pullback, are we getting some form of huge volume spike, right? If increased volume happens here, it's likely ending volume. That's 3, okay? And now 4 on this, is there some type of catalyst like a bottoming tail or a changing of color bar, all right? So those are 4 things you can consider after the pullback. And then even after all of that, we still just don't randomly jump in. We jump in when this next bar trades above the prior bar. Okay, guys, this is basic. We're going to get in more detail in a second. So my point simply is we have all 4 of those things, right? Check, 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 check. But we still have to wait for an entry, right? We still have to wait for this bar right here to trade above the prior bar's high. So that's the basics. One of the things we haven't talked about, and it's probably, I don't want to say number 5 on the list, but it's in there, is what is to the left? Over here, we don't have anything to the left. So what is to the left? Do we have support to the left? And if so, what type of support is this? All right, is it significant support? Right, we'll talk about that in professional trading strategies. So there are 5 things to consider there. Real quick recap. What's it like versus the average trading range of the stock? Is it extended in that respect? 2, are there multiple wide range bars? 3, is there volume on those wide range bars? 4, is there some form of support to the left? And 5, is there some type of bottoming tail, changing of the color bar, etc.? Okay, and then you still wait for the trigger. If you do it in that systematic approach, you're not going to make nearly as many mistakes as I made today. All right, so let's take a look. All right, so here is an example, and I tried to use recent stocks we looked at. This happens to be the SPY from yesterday, So we take a look to the left. All right, first of all, we can see the bottoming tail here from earlier in the day, and that wasn't a small bottoming tail. This is a pretty big bottoming tail for the market. Market moves up in a choppy manner, kind of puts in a little double/triple top, right? There's a top here, pivot here, a pivot here, and it starts to pull back. And notice the second bar of the move happens to be a wide range red bar. You actually get a little bit of an inverse 3-bar play, but this would be a very, very aggressive 3-bar play in an uptrend, okay? Then you get bottoming tails, wide range bar, bottoming tail, but gets engulfed by a wide range red bar. So these, when you compare them to average bars, these are definitely wide range bars. The market moves from 390.50 down to 389.40, all right? So a couple of things we're going to talk about. Yes, 8 bars down nearing support. Expect what? Expect a bounce. But a lot of times what you guys are messing up, and this was the title of today's lecture, is support is an area. Area means general. Doesn't mean specific to the penny. And you're going to see here on the next several slides what I mean by the penny. So anyway, when you look at the SPY, we have a double bottom retest. It should bounce here. It's extended on slight increased volume. You can see there's a little increase here at the bottom. It's extended into an area where the market previously bounced. So you would expect another bounce in the market. Now, did we expect it to break this high? No. I expected the market to have a 50% retracement, shallow pullback, and then retest 390.40. Why would I not expect the market to break 390.40 potentially? Because of the triple top, right? You can see here the market closed strong yesterday or the previous day, gaps down, retest, fails, okay? So in this respect, we have a triple top. So if you're going to take this entry right here at like 389.70, give or take, with a stop at 389.40, that's a 30-cent stop. So you have to realize that 389.70 up to 390.50 is an 80-cent move. You have about 2.6 to 1. That's fine. That's an acceptable amount of space. But what are you doing here? And this is going to be the theme for today. You're letting the chart guide you. You're not putting, and again, you guys understand the analogy. You're not putting words in the chart's mouth, okay? You're letting the chart speak to you, and you're listening with both ears. You're not putting your opinion on the chart, your spin on the chart, or words in the chart's mouth. You're saying, okay, the chart is telling me that it's extended into an area of support. with a slight volume spike, and it should bounce here. To what extent it should bounce, I don't know, but there is room to 390.50. Okay? Next, here's another example from, I think it was a week ago or so. You have a stock on Baidu that gaps up over some resistance to the left, gets really choppy, bounces, even in a choppy manner, it bounces, but then what happens? It completely rolls over. I mean, a wide range red engulfing bar, topping tail bar, another wide range red bar, another wide range red bar. You get your first sign right here. Bottoming tail, where? At support. What do we get here? Bottoming tail at support, okay, and moves higher. Sure, it chopped around for a long time, right? This didn't just trigger right here and then go back to the high. It took, what, almost an hour before this thing broke out. But here's the beauty. This pink line gives you an opportunity to add on this trade. Right? So you could have taken the first entry on the pullback, but once you saw that lengthy consolidation, it was an opportunity to add and reduce. So what are we going to do there? You're going to add over here at 246. And again, you could have added over here as well. And you're going to raise your stop up to 244. So your initial entry is like what? 244.30, but your stop's down here at just under 243. Okay, so all right, good. But then you have an opportunity to add right here with a stop that gets raised to 244. So now you're basically raising your stop by $1. So you're tightening your stop, which allows you to add shares without any more risk exposure. That's the key to add and reduce. But what started this move? The double bottom retest extended into support. And the support isn't just from the pullback at the earlier in the day, it's also from yesterday. All right? And you get a bottoming tail here, and you get a second bottoming tail here. It's a good entry point. It's a good add point. Rip. I mean, the thing went $4 in 2, 4, 6, 8, 10 minutes. It's beautiful. It's beautiful. So it's a double bottom retest, but again, you are letting the chart make the determination for you. You're not putting your spin on it, okay? Here's another example. Here's a stock that was moving higher and then whap, gets slapped pretty good, okay? Wide range red bar, bottoming tail gets engulfed by wide range red bar. 1, 2, 3, 4, 5, 6, 7 bars down. But what do you get? You get wide range bars, multiple wide range bars. You get a massive volume spike at the bottom, and you also get a little bottoming tail doji bar. So getting in this here is definitely a little bit aggressive because we don't know what's to the left. If there's a support area to the left over here, sweet, sign me up, get me into this thing, okay? But what we're seeing is this should, because of how it set the low, and guys, that's key. How a stock sets a low is important because if it sets this low, it should set that low for the rest of the day. Depending on the time frame, it could set the low for weeks or months. This happens to be a 60-minute chart. So I believe it's a 60-minute chart. So this should set the low for weeks. And guess what it does? It bounces back up, chops, retest, bounces back up, retest, and then the trend goes higher. So we have a stage 4 downtrend, stage 1 sideways trend, and a stage 2 uptrend. Okay. Could you have gotten in here? Yes, you could have. Okay. Could you have added down here? Yes, you could have, but here's the difference. You can't raise the stop very much because you're adding in roughly the same area. All right. That's something Unmol does frequently, right? He adds in the same area that he originally got in and then tightens the stop slightly. But I'll be honest, you have to be careful tightening the stop on an add in this area because we're still under the moving average. Okay, the stock has not shown a significant amount of bullishness. We're simply going off the fact that the stock bounced over here on volume and should bounce again because, well, we're retesting that prior area where buyers stepped up before. Okay, chops around, retests, and then bounces. Okay, now here is the thing. All right, the area part matters. So we just looked at some pullbacks extended into support. We've done that before. We've looked at extended into support before. But the one part that really gets traders is what we're about to talk about, the area part and your lack of confidence to get back in. Okay, so let's talk about that. Remember, support and resistance is not a penny. It's an area. It's always an area. Even if it's a penny, it's still an area around that penny. And with how good high-frequency trading machines, HFTs, have been the last 15 years, you might want to take that to heart. Okay, so let's take a look. Poor Michael. Poor Michael. All right. Stock gaps up. This was yesterday. Leaves a bottoming tail. Goes higher, topping tail, bottoming tail. Bounces back up, and what happens? What do we get right here? 1, 2, 3, 4, 5, 6, 7 bars down. Okay. 7 bars down. Triggers your entry. Like, you're doing everything right here, right? You're sitting there going, wait a second. Okay. We have a double bottom retest to the left, albeit sloppy, but hey, big time bottoming tails on volume, showed a bounce. We're extended into that same area. We should bounce. So in your mindset, you're making the right decisions. You're making the right choices. You're going, okay, I'm going to get in over this doji bar. I'm going to put my stop loss under the bottoming tail, which is proper thinking. And you're going, hey man, we're right at support here. We should bounce. Well, you do. You get triggered in and whop, you get stopped out. 5 minutes later, you're out. And then you check back after, you've taken your walk because you're so pissed off. And you check back later and the stock's trading at 133. And you're like, you mother beep, 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 beep. That's it. You're pissed. And rightfully so. You got shaken. This is what is meant when I say support is an area. This bottoming tail was a little higher. This bottoming tail was a little lower. These pulled a little lower, but this general area of 130 held. This general area of 130 held. Chops around and then rips. And then all of a sudden you're crying like Big Mike at his Hall of Fame induction. Except you're not in the Hall of Fame, you're in the Hall of Shame because you didn't get back in. So you have two choices here. You can give your trades more room, right? Support is an area, give it room. And if you still get tagged, get back in. Guys, this is going to be a theme for the next 3 slides. So get used to it. I'm going to drill it into your heads, okay? If you were too tight and you got stopped, get back in. If you gave it enough room, let's say you gave it to, 129.50, okay? Yeah, it makes your stop and your risk to reward different. I get it. But even if you gave it room and still got tagged, get back in. Get back in, get back in. All right? You know how frustrating this is? Now, again, did this thing rip? Not really. I mean, it only went $3, which for NTES isn't that great. But at least you ended the day in the money, at least $2 in the money, or about $2 in the money. It's better than not being in the money, isn't it? Poor Mike. Poor Mike. All right, next. How about this one? Oh, wait, this was from yesterday too. Okay? Now, what happens? The 15-minute 3-bar play triggers on the left-hand side. Wide bar, narrow bar, ooh, peekaboo. What happens? Stopped out here on the penny. Why? Because I didn't give it room. I literally got stopped out at 854.95. If you go look at this chart from yesterday, February 9th, okay, it shows right here, that tail right there is 854.95. I put my stop at 854.95. Why did I do it? I didn't want to take slippage. I thought, well, if I put it over 855 or 855.50, I might take some slippage, and I don't want to take slippage, so let me put it on the penny. Tagged on the penny right here. Now, did this ultimately hit the 2R target? No, but if you would put your stop loss above 855, guess what? Instead of minus 1R, you at least end the day slightly in the money. Not by much, but at least you're plus, a little bit, 50 cents versus minus $5 on this thing. See where I'm going with this? Whose fault was it? This was my fault. I took this exact trade yesterday. Came all the way up to that area of prior resistance and then dropped. Was the ultimate goal what you wanted in terms of getting 2-to-1? No. But wouldn't you rather save being stopped out on a trade? Especially on the penny. You know how frustrating that shit is? On the penny, at least you end the day break even on it instead of losing whatever you were risking on it. Use your brain, guys. Come on. And I'm saying come on because I made that mistake yesterday. So basically, it's a little self-affirmation. How about this? Here's a stock that's a little bit sloppy. Okay, so chop, 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 rips higher, pulls back. But what do we have here to the left? Okay, green bar here. bounce, 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 bounce. I mean, this area at 1525, whatever it is, man, the buyers like this area because it's tested it once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10 freaking times. And it finally bounces. Couldn't break. It left a bottoming tail every single time it tested that area, okay? It bounced back up, drops. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars down, 2 or 3 wide range bars into support. Bottoming tail, change of color bar, what are we getting? Support to the left, check. Multiple bars down, check. Wide range bars, check. Volume spike, mediocre. Bottoming tail with a change of color bar, check. I mean, we're checking it off. We're letting the chart speak to us, right? What do? You get in on the red bar, don't you? Okay, cool, you're supposed to. But you wanted to have a tighter stop under the bottoming tail, right? That's what you wanted. So you got stopped out right there. And then you just watch the stock go from 1550 to 1950 without even looking back. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 green bars in a row. And you're sitting back there. Poor Mike. Poor Mike. Poor Mike. That's what you're thinking, right? Because you're sitting there going, are you effing kidding me? This is 2 trades in a row. And I got tagged on Tesla. I have a penny. You get into this stock. You get shaken out only to watch it go higher. So what do you mean? So what's the goal? Or what should you do about this? You have 2 choices. Give it more room or get back in. Sometimes you have to do both, right? Sometimes you have to give these trades more room and they still tag you, but doesn't preclude you from getting back in. Do you know how freaking frustrating it would be to stop out on this stock and then to watch it go $4 higher, which in this particular case is like a 35% move? Hello. All over that little bottoming tail because you didn't want to give it a little room because you were worried about your risk to reward not being good enough. Let's be honest, that's exactly why we do it. We're concerned that our risk to reward might not be good enough, so we tighten the stop. Instead of letting the chart dictate what we do, we tighten it up. I think that extra 25 cents you should have given us was made up for by that $4 move. Yeah, it was. All right? Next. This is another one that happened yesterday. Imagine how this lecture topic came about. All right? Stock gaps up, moves higher, retests. This is a good entry, okay? Red bar, red bar, red bar, red bar, red bar, red bar. It's a lot of red bars, 6 of them. Where is it stalling? Right at prior pivot support. So you could get in this on Tilray. This was the best entry of the day on Tilray. It bounces back up, pulls back. What do you have? You have a little bit of a buy setup here. Okay, now, a couple comments on this. Let's say, hypothetically, you bought Tilray where you should have, which was this double bottom retest. Okay, I wish I did, right? They moved up, gave you an area to add. So maybe you add right here, okay? And now you raise your stop. What happens? It bounces, pulls back, and what happens? You get tagged by a little bit, and then the stock goes $8 higher. Support is an area, right? It's an area. This is a perfect proof of that area. If you take a look right here at this pink line, sure, that's the prior pivot high, right? The ceiling becomes the floor, but sometimes it peekaboos under that area and then works. We've seen it on the last 2 slides. They'll just peekaboo under an area. In this case, it happened over a 6-minute period. And then all it did was grind higher for the next hour. And how are you feeling now? Sure, maybe if you bought the double bottom right here, you made some money off of it. But how does it make you feel knowing you got tagged by 50 cents and then the stock went $8 or $9 higher? Feels like crap. It's an area. It's an area. It's an area. It's an area. So if you're pivot trail stopping, give them room. Give them room. So it doesn't always have to be on the initial entry, right? So this initial entry was down here and it never got shaken out. It looked great. It bounced huge, pulled back, retested. You're tagged by 50 cents, whatever it is, and then it goes higher. Okay? Give them more room. Let's keep looking. All right? Here's another example. Now remember what I said earlier. Sometimes the chart will get you. Even when you give them room, sometimes this will happen. That's just life, that's just trading. We don't have a 100% batting average, but you don't need one. That's the beauty. Get back in. Get back in. Get in the mindset and the habit of getting back in. All right, so stock moves up, pulls back, moves up, pulls back. What do we get? See the bottoming tail in the doji bar right there? This is a nice buy setup. Sure, the retracement level is a little bit deeper than we would like. We would have liked to have seen this somewhere in the $19 range, right? What do we have here? We have lower high, lower high, lower high, lower high. Bottoming tail doji bar, you buy the buy setup. Are you kidding me? You put your stop loss under the bottoming tail. Tags you 2 days later right here and just proceeds to go higher. How are you feeling now? But yet, the pivot low is here, and yet it peekabooed under the prior pivot low, and it peekabooed under the bottoming tail. Just peekaboos. And then it goes higher. And you're sitting there holding your you know what and going, are you kidding me? All over 20, 30, 40 cents because you needed to save a little risk to reward. This is what happens all of the time to traders. And it happens to me too, because I get in the same mindset. Like, well, I better use the tightest possible stop loss because I need to get to that target quicker. Well, there are times when you're pushing the envelope, where you give it more room and you're like, man, getting 3R out of this is going to be a challenge. Well, that will be dependent upon your management approach, right? If you're doing all or nothing, maybe you don't take that trade because the risk to reward isn't there because you gave it a wide stop. But if you can raise your stop to break even after 1 or 2R, well, it might be an acceptable trade to take because maybe it has 2R in it, but 3R is a stretch, but you go to break even, so it doesn't matter. You see what I'm saying? Okay. So when you look at this stuff, you don't want to be getting tagged out when there's a prior pivot there by a couple pennies when you probably should have put it under the pink line to begin with. Okay. Now, another example. We've seen this one before. I probably put this out there a couple times through the years. Here's a stock in a downtrend. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. But what happens at the end? Right? So we have a bunch of lower highs and lower lows. This is clearly a downtrending stock. It's below the trend line. It's below the declining moving average. It's in a stage 4 downtrend. All that's well and good. But right here is where we start to see a little bit of an acceleration. 1, 2, 3, 4, 5, 6, 7 bars. And one of those bars has a massive, and I do mean massive, because compared to the average volume of 3 or 4 million shares, it did 10 million. It did triple volume that day, which means the bottom is near. It may not be today, but the bottom is close. Ultimately, it bottoms out. Is this buyable? Absolutely not. Absolutely not is this area buyable. It bounces back up below the declining moving average, puts in a red bar, and here is where it starts to become aggressively buyable. You have a retest here. But here's the thing, okay? Just because this bounced doesn't mean your stop loss shouldn't be under the green bar. See, a lot of people would get in on the green bar right here, which is an aggressive entry, and they'd put their stop under the red bar's low right there, right? When in reality, it should be under the prior pivot low and under the green bar with a little bit of room just in case it tests, because support is an area. It's an area. Give up the 50 cents. Give up the 20 cents. Give up the $1. It's an area. It'll save you a lot of money in the long run. So this is an aggressive entry. It bounces, puts in a higher high and a higher low, and pulls back. Where does it pull back to? Above the trend line, at the prior pivot high, with a bottoming tail and a doji bar right above the rising moving average. This is the cat's meow, the bee's knees, the creme de la creme. This is one of the best entries you can take on a chart. It's a transitionary buy setup between a stage 1 and a stage 2. We're out of a stage 1. We're not into a stage 2 quite yet. We're right in the middle. It's a transition period. This is the best buy setup you can get, but you still got to give it a little room. Give it room under that bottoming hill. Give it room under that rising moving average. Because if you're right, you have room back to like $40. And if it does go back into a stage 2 uptrend, you might get back to $60. Are you going to squabble over the 30 extra cents you gave it if it's got $30 worth of room? No. So you're in at $26 with a stop at 25. You're already up 9R 2 weeks later. Not bad for a swing core trade. Not bad. Yesterday, another one. or 2 days ago, my bad, 2 days ago. This is a bit of a mini climactic, but guess what applies? All of the same rules. The chart is talking to you. Do you understand its language? Do you understand what it's saying to you? 1, 2, 3, 4, 5, 6, 7 bars down. Multiple super wide range bars. A huge bottoming tail with ridiculous volume. What kind of volume is that? It's ending volume. Get in here. Yes, you heard me. Give it the wide stop. Give it the wide stop. Especially on a climactic. It bounces, it pulls back, and it rips. Okay? So you're going to be in somewhere around, I don't know, $71, $70.50. You're probably going to have to give it a $2 stop loss, most likely. Okay? It pops up about $3, pulls back, rips. It ultimately goes $6. 3-1. Because you let the chart talk to you. You didn't tell the chart what you were thinking. The chart talked and you listened, right? Like a good husband. Your wife talks, you listen. That's it, okay? And whether she's right or wrong, she's right. The chart is right, okay? It's never wrong. It is what it is what I'm trying to say, okay? So big bottoming tail, big volume spike, get in right here. Stop loss, yep, all the way down there. Maybe you get an opportunity to add, which frequently happens on climactics, but the concepts are still the same as extended into support. I put it in here so that you understand that extended into support isn't just a double bottom retest situation. It's not just a stage 1 into a stage 2 transitionary situation, okay? It can also be had with climactics, all right? Another example, okay? Breaks the trend line, bounces, retests the area. But again, this is a tough one because now you're putting in a higher low. The temptation here is to put the stop at 12 when reality says you should probably put it at 10. What does that do? It gives you a much wider stop loss. Much wider stop loss, okay? But it'll save you from this happening where it has a little bottoming tail, peekaboos over, and you stop out. You'll put it all the way down here, all right? This is a tough one. Because you're tempted to say, well, I want to take the 3-bar play. But look where you're at on the chart. You're at a more aggressive area on the chart. Respect the area. Give it more room. Okay? Last slide. So again, stock, multiple bars down, wide range bars, bottoming tail, volume spike, doji bar, green bar, bounce, retest, bounce, pulls back, bounce. Note, this is all an area, guys. This area right here was taken out by this pivot over here. This is a sloppy pullback. Topping tails, bottoming tails, right? It retests this area, puts in a higher low, but then takes out that area. It's an area, okay? It's an area. But note how good this one is. Why? Because you're 1, 2, 3, 4, 5 bars down with a bottoming tail, with a volume spike, with wide range bars nearing the bottom of support. So get in at just above $80, but give it the room. Give it under the pivot area right there. Don't give it under the bottoming tail. Give it under the pivot area. And if you still get tagged, wait for it, get back in. Get back in. So this lesson in many ways is fairly simplistic. But are you applying that? Are you using these tactics? Or are you sitting there, unfortunately, like MJ, crying tears of pain? I'm not joking about this. You get in and you're like, I did everything right, except give it enough room. And if you did give it enough room and got tagged, you did everything right except get back in. Guys, just because it stops you by 10 or 20 cents, does that mean the entire pattern is just shot now? It's gone? No, support is an area, okay? So think of it like this. 1, what's the lesson? Learn the language of the chart first. Take professional trading strategies. Learn the language of the charts. 2, objectively listen to what the chart is telling you, okay? If you're not sure, don't pretend to understand. Just move on. Set it aside. Take a picture of it. Put it in your binder, your folder, and say, I'm going to come back and check this after the market closes when I have some time. But I am not going to put my hard-earned money into something I don't understand. Okay? It's kind of like you're doing a business deal and somebody's speaking a different language that you don't understand, and they ask you a question, so do you want to buy now? And you shake your head yes, and you have no idea what they said. That's you, or many of you, trading certain charts. You're sitting there and the chart's talking to you and you're not understanding what the chart is telling you, but you buy it or short it anyway. Why? FOMO? Need to be right? Get rich quick? Just made a mistake? One of those reasons. So if you don't understand what the chart's speaking to you, just move along. Don't pretend you do. Take a picture of it, move along. Don't put your money into that one, okay? Third, give support and resistance areas room to wiggle. Give the chart some room to wiggle, okay? It's like, I don't know if it's a good analogy or not. You tell your kids to be home at 9 o'clock and they come home at 9:02. Well, it's not 9:22 or 9:52. It's 9:02. Are you going to ground them for a month because of it? Probably not. Give your stock some room to wiggle. If you get stopped out, consider re-entering. If you get stopped out, consider getting back in. I would say these are pretty simple lessons, but they're profound at the same time. How many of you do these things on all of your trades? I know I'm guilty. We took a trade on Baba today that I almost put in here. Should not have taken that trade today. Should not have taken that trade today. You get in right just below 270 when the resistance is at 271. Duh. Stupid. Duh. But what happens? You know where I'm going with this. What happens, guys? One time you see a stock under a dollar under resistance, say Baba, and it rips. And you're like, I knew I should have taken that. No, you shouldn't have. It just happened to rip. So the next time, because the previous stock ripped, you take that stock under support, under resistance, all right? In this case, under resistance. And it doesn't rip, it stops you out. And now you're tongue-tied and twisted. You're like a pretzel. You're doing the wrong thing at the wrong time because of wrong thinking. Because the previous trade bucked the odds, bucked the trend. Doesn't mean it's right. It's like taking a half-court shot in basketball. It's a low percentage shot. Why would you do that? And just because Steph Curry goes and makes one doesn't mean he should do it frequently, does it? No. Baba was below resistance today. We took it. I stopped out on it. Dumb. Stupid is as stupid does. Learn from it. Okay? So with that, I hope you guys learned a little bit about support and why it's important to recognize it's an area and to give your trades more room. And if you give them more room and they still tag you, definitely, absolutely consider getting back in them. There's nothing worse than watching a trade that was decent. It's why you took it in the first place. Go and hit target while you're sitting there twiddling your thumbs because you got tagged by a nickel or a dime. All right? So, hope you guys enjoyed that. I'm Jared Wesley of Live Traders. We'll get back at it again next week.